right, what's up, family? Welcome. This is Joe with Schematic Solutions, and today we're covering lesson two, which is going to be about ranges. And ranges is something that really kind of like allowed me to take my personal trading game to the next level because, of course, market structure is that first big piece. But when we're talking about a range, it has so much to do with structure. A lot of times people just either throw it in with structure quickly or leave it out. So this is why we're pretty much just breaking it down, making it extremely simple because it's going to tell you where we should be trading. And if that range is broken, ultimately we're going to have to reanalyze the setup. So three types of ranges or three time frames of ranges. And keep in mind, of course, higher time frame trumps all. So first things first, we have our higher time frame range, and this is going to be the largest range. Then we're going to have our intraday range, and then last but not least, we will have a lower time frame range as well. Now, typically, to have the highest probability, we would like to trade with these three time frames in confluence. So let's say we're looking for a buy, we would like for our higher time frame range to be bullish, obviously, our intraday range to be bullish, and our lower time frame range to be bullish, um, just so we have the highest possible setup. So now, before we dive into an actual little example, let's understand the ranges based off of our trends. And this is something that really allowed me to kind of just have my breakthrough and kind of, I guess, just really understand structure a little better. So, in an uptrend, keep in mind we have higher highs, higher lows, higher highs. So, our range is always going to be from the higher low to the higher high in an uptrend. And the reason why we say higher low to higher high is because of how we measure the range a little later. So just keep that in mind. It's not higher high to higher low, it is higher low to higher high. So now for our downtrend, we are creating lower lows, lower highs, lower lows. Our trading range will always be from our lower high to the lower low. For our downtrend to the break of structure to an uptrend, we have lower low, lower high, lower low. We then break structure and get a higher high. So our range is always going to be from our lower low to our higher high. And then last but not least, when we're in an uptrend and break structure to a downtrend, we have higher high, higher low, higher high. We then break structure and make a lower low. So our trend is always going to be from our higher high to our lower low. Our range, sorry, our range. So now the reason why we find our range, besides it kind of telling us like where we should be playing, where we should be trading in, is it helps us identify premium and discounted prices. So ultimately, keep in mind if we're buying, you want to buy at a discount. For example, let's say we have two cars, whatever type of car, your favorite car, but it was at the same lot, same car, nothing's different at all, same years, same mileage. All that's different is one of the cars you have 10% off, and the other car you have 70% off. Keep in mind, same exact car. There's no BS, not no limit. Um, it's literally just a deal. Which one are you gonna pick? I don't know about you guys. I'm a buy it for 70% off if I can. If there is no like if if the quality is the same, quality is the exact same, there it's kind of like a no brainer. So same thing with trading. You don't want to buy at a 10% discount. You want to buy at that 70% discount. And then let's say you were selling something. Let's say you were selling a car. You're a car salesman, and you have an option to either sell the price or sell the car for 80% of its worth, or would you want to sell the same exact car for 30% of its worth? If I am a car salesman, I want to sell it for the higher percentage, which is why if we measure our trading range in the downtrend, 50% is right there. I want to sell. I realistically want to sell above 50%. 70, 80% is where I want to sell to then take it down. So keep in mind, uptrend, we're buying discount. Downtrend, we are selling a premium. Now let's get into this little example. Perfect. So we have our uptrend, and inside of that uptrend, we have a fractal trend, an intraday time frame trend, and then inside of that intraday, we have a lower time frame trend. So based off of this price action right here, let's identify the best areas to look for buys and the reason why. So first things first, we have to identify our trend. And how we identify our trend is we identify our current high. We want to identify the high before it. And the lowest point is what's maintaining us as being bullish. So if that's our structure, our trading range is from here to here on the higher time frame, which is why we have these pink lines right here. So that's our higher time frame trading range. So once we have our higher time frame trading range, we then want to identify our intraday trading range. And at the time of being down here, our intraday trading range is, this is our high, this is our high before it, meaning this is the low maintaining. So this is the high of our trading range, this is the low of our trading range. So that's for our intraday. So at this point, we're just pretty much scaling down to the lower time frame. And inside of here, the best times to look for a possible buy are going to be when the lower time frame is bullish as well. So after this first break, we're now bullish. So this would be a good time to buy. We break again, this would be a good time to buy. Price then pushes up, but then after that push up, what do? We take out this trading range right here. From this low to this high is taken out. We break structure to the downside. So if you would have tried to sell from here, you would have caught a quick little TP just straight to the low, but you're not getting the real TP you want because you're trading based off the lower time frame. The higher time frame is still bullish. We're not even in a pullback for the higher time frame. We're in a pullback for the intraday. The intraday, we're still bullish. We're just in a pullback. So lower time frame, that's going to look like a little downtrend. Now, once we break order flow again for the lower time frame, we then understand, okay, higher time frame is bullish. Intraday, we made a new high, so we're bullish. Lower time frame, we are making new highs, so we're bullish. Let's pull the trigger. And this is how we utilize both structure, order flow, and our range, our trading range, to really just keep us focused on a certain area so we don't get lost in all the noise. But I hope that answered all of you guys' questions. If you guys do have any more, feel free to hop on the live sessions and ask. And I hope you guys have an amazing rest of your day.